Well, it seems as if the whole 20-minute video that was just made on this topic did not pick up the audio for whatever reason or another. It seems like someone somewhere knows something or just does not want you to hear this information. That sounds pretty logical to me, right? All jokes aside, AMC stock short sellers could be setting themselves up for potential margin calls. And I want to go over that thesis that I am starting to see that is a possibility that could play out. By no means is this a guarantee. It's just something that could ultimately end up happening. Now, we're going to look at the reverse repo markets. We're going to talk about hedge fund institutional positioning, what I see going on in the markets right now, what we really need to see margin calls actually happen with AMC stock. So hit that like button and subscribe to the channel. Let me know what you guys think about this information. If you guys want to check out the new channel that we just created, it's called The Money Problem, hopefully helping to fix a lot of money problems out there. Check out the link down below in the description of this video to go over there and check it out if you guys would like to. We go over broad market topics, where I'm investing my money now, best stocks to buy now type of deal, fundamental breakdowns on different names. Check out that link down below in the description of this video. Nonetheless, let's get started with this one, margin calls. Now, margin calls happen really two ways, right? Either heavily concentrated hedge funds institutions with, let's say, short positions or long positions in a stock that goes the opposite direction they were betting on. So maybe a lot of shorts in AMC. AMC starts to rally. You can start to get some margin calls in that AMC position. If that position is large enough, you can start to get some broad portfolio margin calls from hedge funds and institutions. Now, I think AMC stock is hundreds of percent sold short, but I don't know how much AMC is going to rally to get to that point. As you guys know, if you watched the last video, Adam Aron has again diluted shareholders about 3 million shares worth. So you have that problem going on. Now, there's another side to potential margin calls, and that is more broad portfolio weakness from hedge funds and institutions. Now, I actually think if we get margin calls with AMC, it's probably not because hedge funds and institutions are heavily, short in AMC. It's not like I think hedge funds and institutions have like 50% of their portfolios short in AMC, although that is a possibility. I believe AMC stock is hundreds of percent sold short. I believe there's a lot of funds that are short in AMC. I don't think it's just a few concentrated ones like maybe what we've seen in the past. With that being said, it's the turn that likely gives you the margin calls in AMC. In my personal opinion. Why is that? Well, for 2024, a lot of hedge funds and institutions believe Magnificent Seven is where you want to be. They believe you want to be in the biggest big tech names again, like you had in 2023. I don't think that is the case. So right there, I think the investment thesis is flawed from that perspective. I think when we actually do get a rebound in our markets and when we do get more capital coming back into our markets, it's going to be in really your small mid-cap stocks, your interest rate sensitive names. Now, could it be in everything? Of course, right? Everything could get a boost, and everything probably would get a boost at that point. But I don't think that's going to happen here relatively soon by any means at all. Now, couple different things you need to know. If Adam Aron continues to dilute shareholders, then I wouldn't expect margin calls to nearly the extent of the possibility that we could see them. If we do get some kind of commitment to not dilute shareholders, let's say for the first half of 2024, that's your best possible outcome when it comes down to all of this information, right? To get a centralized bullish catalyst with AMC, to really put those funds that are short in a world of hurt in regards to specifically AMC. That would be, exactly what you would theoretically want to see. I don't know if that's going to happen. I don't know if Adam Aron's plan is to make AMC go bankrupt. That's kind of what it seems like to me. They continue to dilute shareholders, beat down the stock for pennies compared to the amount they actually need to raise to, eliminate their debt. Essentially, at this point, if Adam Aron does not give you a commitment to not dilute shareholders until the second half of 2024 or maybe 2025, who knows? If Adam Aron does not allow AMC stock to rally into the 20s or 30s again, AMC will never be able to pay off all of their debt. AMC stock will eventually go bankrupt. Maybe it's 2 years or 3 years or 4 years from now, but eventually AMC will go bankrupt, okay? So you got to be prepared for that. Either way, if you're investing or trading in AMC right now, you got to be prepared for that, okay? Now, the flip side is maybe if AMC can get to $20, $30, $40, $50 per share, AMC could dilute shareholders really the same what they are doing now, like 40 million shares, and pay off massive amounts of debt, right? That's what would probably, be seen as good if AMC could dilute shareholders at much higher prices. It probably wouldn't be seen as such a negative like it is today. So let me know what you guys think about that, by the way, if you think a commitment to not dilute AMC shareholders anymore could actually be coming. That would be hopefully best possible outcome here in the near term with AMC. Now, as far as this margin call situation, it's actually the turn when AMC starts to do better, when money starts to flow into AMC stock, when money starts to flow into small and mid cap stocks, that's when I think you might actually see the massive outperformance. Now, something I want to turn your attention to is the reverse repurchase agreement market, reverse repo market with the Fed. Now, reverse repos, it's basically showing you the cash amount that is being turned into overnight treasuries, right? That pays the banks out a certain small portion. Banks can do a couple different things with their deposit base. They can give out loans. They can buy treasuries. That's it. They can't buy stocks with customer deposits. They can't give money to hedge funds or institutions with customer deposits. But what they can do is they can buy treasuries and then give cash to hedge funds and institutions, or let them borrow from the banks at that point. Because there's so many regulations on what a bank can actually do with customer deposits for obvious reasons, right? You don't want a bunch of Silicon Valley Bank situations happening over and over again. Now, this pool of capital is really starting to be wind down a lot. From May of 2023, you were at about $2.2 trillion. Today, you're at $704 billion. You did see a spike last week. That's expected. The last day of any given year, you typically do see, to some degree a spike. Not always, 300 billion worth of a spike. But yeah, you're back down to where you were before then. So reverse repos likely to continue declining from here. What this means is there is potentially a lot less collateral margin loans themselves that can actually be taken out from hedge funds and institutions in regards to banks. Now, there's ways to get around this, but by and large, you're dealing with banks here if you are a large hedge fund or institution with your market strategies, right? You might use a JP Morgan, a Morgan Stanley, a Goldman Sachs, but you're going to use someone or multiple banks if you are a serious fund, okay? If you're dealing with hundreds of millions of dollars, things like that. So this pool of capital winding down is a pretty good sign of where the banks are at as far as their lending capabilities to riskier sectors like the markets, to hedge funds and institutions. So this is a pretty good sign that liquidity starting to get stretched as is. Now, some of you guys might not know this, but hedge funds and institutions are now 100% net exposed to the markets, over 100% net exposed to the market. So what that means, if you're 100% exposed to the markets, that means you're going to move like dollar for dollar with the markets, right? If you're net long on the markets, net levered to the markets, that means you're going to move more than the markets, to the upside and to the downside. So when you start to get a downside move like we have seen, almost 2% down in the S&P in 2 days, that is rough, okay? That is not exactly where you would want to be if you're net levered on our markets. Now, specifically, Apple. I think Apple's an interesting name because Apple has a real reason to likely continue to fall from here. Apple has fallen big time over the past, couple of weeks, really ever since it hit the high back here. What day was this? Apple hit the high on, looks like December 14th. There's likely a real reason why Apple could continue to fall from here, but Apple has basically fallen about 7.5% in the last couple of weeks. Apple is the largest company in the world by market cap. Apple is one of the most invested stocks in our markets. Hedge funds and institutions, if they wanted to comfortably just place their money, set it and forget it in a name, they're putting their money in Apple. Apple has a lot of collateral-based positioning as well. I think a lot of people look at Apple like there's no way this stock's going to fall 20% in a short amount of time. There's no way this stock's going to fall 10% overnight, right? Even on earnings, like Apple doesn't even move like that, not even close. So to get this all of a sudden weakness in Apple, I think is catching a lot of people off guards. You've also seen a lot of weakness recently, to some degree, in Microsoft, Nvidia, some of these other names as well. Although Nvidia and Microsoft holding up a little bit better. Tesla's another name that has seen a lot of weakness also that could be heavily used as collateral. But I think Apple's really the big dog here. And I mean, unfortunately for those firms, Apple has a pretty, there's a good reason why Apple's falling right now. It's richly valued. This could be 5 quarters in a row with declining growth. iPhone 16 sales probably not going to be that strong. If services revenue slows down because of some of their issues they're dealing with on a regulatory side, especially with Google, right? I think Apple gets like 30% of there's like Safari revenue from Google as they promote Google for Safari searches. I mean, some of those things, if those start to be bigger problems for Apple, Apple could continue to fall from here. And that would put even more pressure on the hedge funds and institutions that are using Apple as collateral for their other market activities. Now, when this ultimately comes to a boiling point is pretty simple. When AMC stock, when small and mid-cap stocks start to rally, the stocks that are likely heavily shorted by market participants that have been heavily shorted over the past 2 years, when these stocks start to rally and Apple does not, Microsoft does not, Nvidia, Meta, Tesla, maybe, does not start to rally, that is where you have the problem. That's when you start to get double squeezed, right? Your short positions start to go against you. Your long positions that you're levered on are not working for you. That's when you're in a pretty bad position. Now, I don't know when this happens. I don't know if it's Q4 earnings, which Q4 earnings, Tesla reports earnings January 24th, and then all the way through like the middle of February, you're going to be getting your big tech names. So that could be the moment when you start to see some capital outflows from big tech, maybe capital inflows to small and mid-cap stocks, as the valuation is so much cheaper for small and mid-cap stocks. So that's kind of my thought process. This is not going to be an overnight thing by any means, and I could be wrong. We may never see any margin calls. We may never see any bullish activity ever again with AMC. Yeah, again, you have to be prepared to literally watch AMC go to zero. If you are not, you better get ready. Because, I mean, in all reality, if AMC does not get the share price higher, and if they are not able to dilute shareholders at higher prices, that's a problem. Okay? That's just not what you want to see, okay? So let me know what you guys think about this information. Do you think margin calls are even remotely a possibility right now? Let me know your thoughts on this. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.